you for analysis on today's Fed decision and what it may mean for the future of this election. Founder and president of Empyrion Wealth Management, Kimberly Foss, Wunderlich Securities chief strategist Art Hogan, and BGC Partners senior strategist, I should also point out, a surrogate for Donald Trump, Steve Cortes. Good to see all you guys. You know, Kimberly, I kept saying, my goodness, if Janet Yellen were to raise rates right now, wow, would she find herself in a whole bunch of hot water. So we kind of expected nothing would happen. When are they actually going to finally move?
Yeah, I kind of felt that nothing would happen at this point, but I think that they're baking in a price move in December, Trish. I think they almost have to. The Feds, I mean, when we're looking at CPI is approaching 2% or about there. You've got unemployment down to 5%. You know, that's right there at their dual mandate. So they kind of have to raise rates in December, and I think maybe by about 25 basis points.
Okay, Steve, let's walk through a couple scenarios. However, if Donald Trump were to win, and I know you're in his camp and you're pushing for that, but if he wins, can't you imagine a situation where the Fed feels almost as though they need to stay active because they're not necessarily sure what's going to happen? So thus, no interest rate hike. Now, if Hillary Clinton wins, I would imagine the Fed also feels like it needs to stay active because their feeling might be, gosh, you're going to continue, assuming she doesn't get the House and Senate, to have all this gridlock in Washington. It's the same business as usual, so we need to stay accommodative. In other words, any way you slice it, you know, I know Kimberly's saying December. I don't know how they move.
Right. Well, you know, it's possible, of course. And I'll say this, you know, guessing the Fed has been a bit of a fool's game. Most people on Wall Street thought the Fed would be raising rates much earlier this year. It hasn't
Even
been
years
since
ago.
last year about this time. That's right. My guess is, though, I do think if you read the Fed speeches, and I don't always take them at their word, by the way. I'm incredibly skeptical generally of the Fed.
As you should be.
But if you... Yes. But if you read the recent speeches, I think the Fed is actually exasperated that no one takes them seriously anymore, that markets don't seem to, that most commentators, people like me, journalists like you, don't seem to believe them very much. And because of that, though, I think they're exasperated enough that they feel compelled to move. The reason they didn't do it this meeting and the prior one was they were too afraid of injecting themselves
so you think it's going to happen
right into
in
the
December,
teeth of this election.
I look at it, and you know, Art Hogan, they have no one to thank but themselves in terms of everybody feeling as though their word means nothing. Because you know what? Their word doesn't mean anything. They get up there and they tell you, we think we're going to move, we think we're going to move, we think we're, as long as the data tells us we can move. And guess what? Then the data, you can slice it and dice it anyway. They keep coming back with, no, we can't move.
Yeah, and I think the real problem, Trish, has been it hasn't been their mandates because, you know, as we see, they're close enough to the mandates to say it's time to move on. It's external things like Brexit. It's like the Chinese currency manipulation in August of last year. There's always a reason that we do.
There's always a reason for a bunch of academics who think that they can control the economy as opposed to the laws of actual economics being at play, market economics.